Hello, everyone. Hello, my name is Mark DeLeon. I am your host. I'm also an insurance broker here in Ajax, Ontario. Welcome to the first episode of the Protect the Dream Project. The goal of the Protect the Dream Project is to become a resource so you can continue to work on your dreams. You know, it's been a kind of a tough couple of years with what's going on, and a lot of people have either given up on their dreams or letting their dreams kind of slip away. But that doesn't mean you have to give up just because it's been a little tough. So we're going to talk about some things here in the Protect the Dream project. Talk about things like insurance, because I'm an insurance agent, things like investing and planning and motivation and, you know, stuff that can kind of help you to get back on the horse and get your dream moving in the right direction. So for our very first topic this year, I guess for this show, I thought it might be a good time to talk about investing, as it's the beginning of the year. And to do so, I brought in some help. My good friend Giuliano Savini, which you will meet in a minute. We're going to be talking about something called segregated funds. Let's bring Giuliano in. There, whoops, hang on, Giuliano. Let's bring you in. I'm going to grab you here. There you are. There's our man, Giuliano. Hi, Giuliano. Good to see you.
Hello, everyone. Hello. Thank you, Mark, for having me.
So, Giuliano, I'd like you're the expert in segregated funds. So I'd like to first maybe have you tell us a little bit about yourself and about Equitable Life.
Perfect. Well, thank you very much again for having me. Thank you, everyone, for joining us today. It's a subject that I've spent about 20 years of my life. My past 20 years experience has been in the investment space, predominantly in the segregated fund environment. Now, I've worked at a number of insurance companies, biggest ones in Canada, and my work here at Equitable Life continues in that career path. So I've gathered about 20 years worth of experience in the investment space. Segregated funds are definitely one of my favorite topics on the subject. So I guess unless you can find somebody with 30 years experience in the segment space, Mark, I'm your go-to expert. So thank you very much again for having me.
Excellent, excellent. Well, Julia, one of the things I want to do in this conversation really is to kind of keep things at kind of eye level, right? So, you know, there's probably a lot of people watching who already know a lot about segregated funds, but my goal here is to really kind of talk to those people who have no clue what this whole segregated fund thing is about. So let's kind of get into it. And the basic question is, I hear from everybody, when you say the word segregated funds, they get this glazed deer in the headlights look. What is a segregated fund, Giuliano?
You know what? That's a fantastic place to start. So let's define the space. A segregated fund, or how you and I refer to as a seg fund for short, is the best comparison I can make is to a mutual fund. So keep in mind what everybody knows about a mutual fund and how this will stack up against what we're talking about today, which is a seg fund. So a seg fund is just like a mutual fund. It's an investment product who is professionally managed by investment managers. They're licensed, they're accredited, they're certified. A lot of them have pre-existing mutual funds. So a segregated fund is a mutual fund issued by a life insurance company. It is only available through a life insurance company because it is an insurance contract. So just like a life insurance policy, just like a critical illness policy, disability insurance, car insurance, auto, home insurance, this is governed by the Insurance Act of Canada. So think of a seg fund as a mutual fund, but by virtue of the fact that it is issued by a life insurance company and only available for sale through life insurance advisors, life licensed advisors, such as yourself, Mark, it is only available through life insurance companies such as Equitable Life.
Okay. So my next question is, so you've got the seg fund, it's like a mutual fund, but maybe you can kind of get a little more in depth as to how a seg fund works. Like, you know, I've got mutual funds, I've got seg. Really, what's the difference?
Okay, so drilling down a little deeper to the next level of information and knowledge, a segregated fund, again, only available through a life insurance company, but it offers certain features above and beyond a mutual fund. So I typically refer to a mutual fund as a roller coaster ride, right? Markets go up, markets go down, so does the mutual fund. If you're well diversified in your portfolio, hopefully the roller coaster ride is not as scary, it's not as up and down. But it is essentially a roller coaster ride. A segregated fund has some bumpers on it, has some features that, again, can only be obtained through a life insurance company. Things such as a maturity guarantee, meaning the money I put in can be guaranteed in its entirety when the contract matures. A death benefit guarantee is another important feature. Things that I invest into a segregated fund, the amount of money I invest into a segregated fund is available to my beneficiaries in its entirety if I want to. And so that money is essentially passed on to the next generation in full. There's features like resets. And every contract is different. So every insurance company has different features on their contract. That's why, first and foremost, it's important to work with a professional insurance advisor, such as yourself, to distinguish between the various contracts and features which are available between companies. But essentially, those are some of the key features of a segregated fund above and beyond the investment of a mutual fund. Then there's also, you get into things like privacy protection, creditor protection, resets, a lot of other features that can enhance the contract. But again, those are the main focus points.
So I'm gonna throw a left curve at you here. Left curve. Um, the word guarantee always piques someone's interest when you say that word guarantee. So let's kind of maybe take that apart a little bit. Uh, Explain the guaranteed part for people. What does that mean? What exactly is a segregated fund guaranteeing for its owner?
Okay, so two things. In order for a segregated fund to be called a seg fund in Canada, it has to have two things. One is a maturity guarantee of minimum 75%, and one is a death benefit guarantee of minimum 75%. Those are the minimum requirements in the insurance contract in order for it to be qualified as a seg fund. Now, let's use round numbers. I put in, I'm 50 years of age this year, and I know, hard to see, but I'm 50 years of age this year. So if I invest $100,000 into a seg fund contract with you, Mark, and I choose a 75% maturity guarantee, that means that by the time I'm ready to retire at age 65, 70, 75, whatever the case may be, that contract guarantee will be no less than $75,000. Now, that's the baseline minimum. So, say the market's doing what they're doing today, doing what they've done for the last 2 years, very volatile. At the time of maturity, say they're down 50%. My investment is not worth $50,000. My investment is going to come back to me at the very least as $75,000. Had I chosen 100% maturity guarantee, which is the next level up, then $100,000 comes back to me in full at maturity. So it's important to know that. Now, if the market value had gone above and beyond the principal investment, say it would have been worth 140,000,
Mhm.
then 140,000 comes back to me in full at maturity. So that's how you define the maturity guarantee. And that's one half of the guarantees. The second level, which is almost more important, is the death benefit guarantee. This can happen at any time. We can't predict death. So this can happen 2 months into the contract, 2 years into the contract, 20 years into the contract. But had I chosen 75% death benefit guarantee or 100% death benefit guarantee, either one of those numbers would have paid out on my death. And that's one of the key attractive features of this product is if I chose 100% death benefit, my beneficiary, my twin boys, would have received 100% of the money I put in at the very least, on the time of my death, within a week of my death.
So,
And that's one of the key things. So, sorry, that's one of the key things that attract people to the segregated fund contract is that death benefit, that ability to guarantee a dollar value, no matter what, to your beneficiaries on death.
so this is something that if you're a conservative person, typically Canadians are relatively conservative investors. This is really something that is really worth their time to investigate, because there's that safety net, I guess you can say, that keeps the floor from falling out, which they may not necessarily have with, say, a mutual fund, for example. Correct? Am I correct in assuming that?
No, absolutely. Like I said, a mutual fund is suitable. I mean, I have mutual funds in my portfolio.
Mm-hmm.
They do their purpose. They serve their purpose. However, they're a roller coaster ride. When I die, I can't tell you how much my beneficiaries, how much my family will receive. I can't tell you the value of that because it's subject to things like probate fees, lawyer fees, accounting fees, taxes, service fees, and the valuation of the portfolio at the time of death. If I died in March 2020, where would the value of my investment be today? If I died in 2009, where would the value of my investment be? November 2009. If I died in 2000, again, another one of the great market corrections that we've seen just in the last 20 years, where would the value of my portfolio be? With seg funds, I can guarantee them. It's in the contract. Nobody can take that away. With mutual funds, it's different. That's simply, it's not better or worse. It's just simply different. That guarantee is simply not there.
Right. So who's? I mean, we talked about conservative investors, but how applicable is something like this to younger people? I can see older people, when they reach a certain age, they're more hesitant. Old people like me, for example, more hesitant to, or rather, maybe not more hesitant, but more concerned about losing their money, that kind of stuff. Let's look at maybe the younger generation, the 20-something, 30-somethings, 40s. How applicable is a segregated fund to their needs?
Well, I always believe in expressing all the features and products in terms of the value they bring to the table, right? So if I were to sit and partner with you and sit with virtually or in person, sit with a young family starting out, typically my conversation starts around their needs and wants. So if the mother or the father is concerned about certain lifestyle in retirement, the maturity guarantee becomes of value to them. If they're concerned about a young family, they don't have any family support around them, they're really by themselves, or a single parent in this situation, concerned about how much money or what situation they're leaving behind for their loved one, again, that death benefit becomes of importance. Crucially, because there's also flexibility built into how that payout is made to the beneficiary. I mean, we can really get into the details of that at a follow-up interview, but so that becomes of value. That death benefit becomes of value to certain groups that I meet, to certain people that I meet. The importance of the privacy protection is probably the most valued feature of that contract. So how we protect the beneficiary designation, whereas nobody knows this, how we flow out the death benefit where it doesn't become part of the will and estate process. So nobody really knows how much money I put into it or who I left it to. Then that privacy becomes very important. And that's often, I find often with certain cultural groups, certain communities, that's more important than the death benefit or the maturity benefit. To business owners, maybe perhaps creditor protection becomes important. And I love this time of year. If you'll allow me a couple of minutes of the aside, I love this time of year because I watch a lot of TV, Canadian TV, US TV. And I look for a number of things. One, as soon as the winter season starts, I start seeing out of the US, out of Buffalo, the personal injury lawyer ads, right? And everybody can attest to them. Everybody's seen them. I can prance off the jingle right now to you if you wanted me to. But everybody starts seeing the personal injury lawyer ads, right? Somebody falls on your property, you know who to call, right? Well, guess what? If you don't have enough liability insurance, property insurance, and they sue you for a greater amount, what assets do you think they're going to go after? They're going to go after your personal assets. A segregated fund, because it's an insurance contract, can afford you that creditor protection against lawsuits. So the possibility that you're protecting your investments for somebody for next generation, not just waiting for a lawsuit on your property to happen, that's important to somebody. So if you're a director of a company, if you're a business owner, if you have property, if you're driving around with $1 million collision insurance, where the average lawsuit from an auto accident is $2 million, guess what? You should probably look at the features of this contract because it can protect your investment assets from lawsuits. So there's a lot within that a young family, a single parent, somebody who's a young professional starting out can draw from and say, you know what, that's important to me. I want to hear more about it. And also I want to invest in it.
So let's say now that we're ready to go ahead, young family or any family, ready to go ahead with a segregated fund. And we're looking at the things that make up a segregated fund and the cost of the segregated fund. Now, let's say I'm a mutual fund owner. You know, there's been a lot of debate over the last number of years about something called MERs, which is the management ratio, the management cost ratios. How does segregated funds compare to mutual funds from a price point of view? Am I going to be paying a lot more for that guaranteed feature? How do they compare to each other?
A great question. And you know what? It's something that I always address with clients that I sit with. It is more expensive. There's no hiding that. This is a more expensive investment product. But if you were to listen to all the advertising in the media today, it's all about a race to the bottom. All the do-it-yourself platforms out there, all the online brokerages, what do they always advertise? Low cost. But low cost doesn't necessarily translate to better value. And again, it's a cost versus value scenario. Yes, I know that this is a more expensive vehicle. Why? Because the insurance company have to set aside capital reserves in order to guarantee those insurance features that I talked about, right? So there's money that has to be set aside as an insurance company in order to cover off every dollar of liability we have. Now, the insurance, unlike the banking industry, is subject to different rules. For example, 100% has to be of the liabilities have to be covered in what's called the LICAT, which is the life insurance. Oh, I knew I should have memorized this. It's an acronym that we can talk about later, but essentially it's a requirement that the federal government puts on life insurance companies to cover off every dollar of liability. So if you, Mark, write a life insurance policy for myself for $1 million, Equitable Life has to make sure that they have access to that $1 million to pay if 2 weeks from now I die while shoveling snow. So that's the same as a segregated fund. Now, you put that much money aside, it costs a little bit more because I can't put that money to work. Banks have a mechanism that allows them to take every dollar of deposit and reinvest it. Reinvest it in mortgages, in business loans, high collateral loans, et cetera, et cetera. So they can turn that money and churn it into profitable business. We don't have the same capabilities on the insurance side. So for us, it's a drag on the money, meaning it costs more. So I always talk about the value that the contract provides to the client, but I always concern myself with the expense of it because it is more costly.
Right. I think that extra cost, like you said, it's really kind of deciding whether you want to buy something once or buy something twice, I guess, if you want to look at it like that way, right? You know, there are people who will buy a $50 pair of shoes and be good with that because it works for them. But there are people who will buy a $200 pair of shoes that's going to last them that much longer and give them $200 worth of value as opposed to $50 and only have to buy it once. So,
but they understand the value of that, right? If I were to go upstairs, my kids love Air Jordans, right?
Right.
And I've gone through every outlet store within Ontario to look for the best value I can find for Air Jordans. But they don't mind paying that extra brand fee, if you like, because they love and they know what they get out of those Air Jordans. I used to shop at Payless before it closed down.
Right.
Now, Walmart, Winners. For me, shoes are a functionality, not a different feature.
Right.
So for me, the cost is important. For them, the brand is important.
Right.
So consider that as their value, and they're willing to pay for it.
Right. So one of the questions I often get also is okay, so I buy the segregated fund. How easy is it to get my money out of it if I wanted to?
As easy as it is to get it out of a mutual fund. They're traded daily. As long as the markets are open, they're priced daily, and it is no more difficult than it is to get your money out of a mutual fund.
And the type of things that you can hold within the segregated funds are like?
Just like mutual funds, the world is wide open. And that's why it's important to work with a professional advisor such as yourself, because you can distinguish between the different investment companies that provide these funds. We're talking about companies like McKinsey, companies like Dynamic, Franklin Templeton, Fidelity, Invesco. These are big brand name companies that have mutual funds, but they also have, within the context of this conversation, segregated funds offered through insurance companies like Equitable Life. So what we do is we take the Invesco fund, we wrap it into our own insurance contract, and we offer that to the consumer through insurance brokers like yourself.
So it's essentially a mutual fund, but with a little Equitable Life wrapped around it.
Absolutely. Excellent.
And
then you distinguish, because you, as a professional advisor, are an independent advisor. So you have the gamut of all the carriers that you can do business with, all the insurance companies, and you get to distinguish and bring to the client what the best contract is out there in the marketplace. So the best funds to choose from, the best features to choose from, the best contract to choose from, and oftentimes the best price as well, because that's a key consideration for your clients. So you're the nexus of that value for that family, for that investor.
And we have. I know through Equitable, there's a number of ways that we can structure the purchase process for the client to just meet their budgetary needs and to make it as convenient for them as possible. As the broker, as the agent. And I think a lot of people don't recognize that the insurance agent or insurance broker can offer the investment side of the business. You do have those who specialize in one side or the next, and then you have some people like brokers such as myself who can provide you with a full solution as well too. So anyway, thank you very much, Giuliano. I'm going to just take a quick look here and see if we have any questions posed to us, or if any viewers have questions, go ahead and put it in the comments section, I guess. This is our first time doing this whole thing, so I may not catch you all, but let's see what we got. Give me 1 second here, Giuliano. Let's see if we got any questions. Oops. Oh, nope, no questions. So I guess we maybe answered everybody's questions as well as could be. But I think I'm going to thank you for your time, Giuliano Savini. from Equitable Life. If you are looking for any kind of help as far as your life insurance is concerned, or getting segregated funds for your family, I'm going to put my contact information up here. Where's that contact information? Let me get my contact information up.
If I may, Mark, it's one
Yes.
thing that always comes up in conversations with
Yes.
families when they ponder this, or when we bring this as a value to them, is I ask them these questions. I say, the car in the driveway is insured because you can't drive it without it, right? The house is insured because that's just smart planning, right? Content insurance, arson, so on. You have insurance through work for your income. Disability insurance sometimes is available through insurance brokers such as yourself. You have life insurance. Perhaps you've already thought about that and you've already hired somebody like Mark to provide you with life insurance. So the only thing that remains, and it's really become more of a focus today than ever, is investments. Why aren't your investments insured? And that's one of the key things that I leave behind with families when they consider this. They say, everything else in your life is insured. Why? Because either you require it or you need it. So why aren't investments deserving of this protection? And that's what seg funds really are, is insurance for your investments. So that's something I want to leave behind for your viewers, and something to consider when they call you is, I want to consider insurance for my investments.
Thank you. Thank you. I'm actually still looking for my end card with the info on it here. I have it tucked away in one of my little tabs here. Bear with me 1 minute. Where are you? Where are you? Nope, that's not it. There we go. All right. So if you are looking to get your income insured, or your life insured, and your investments insured, you can feel free to contact me. Here's my contact information. Protect the Dream, Mark DeLeon Insurance. My email address, you can reach me on Facebook, DM me on Facebook or through LinkedIn, and I'll be more than happy to speak with you. We can set up an appointment right here online, and be COVID safe. And thank you very much, Giuliano. Have a good
Thank you, Mark. I
afternoon.
appreciate it. Thank you to everyone who listened in. If there's any questions we didn't answer for you, or something that you can think of afterwards, connect with Mark, and Mark will either provide you the answer or reach out to me, and I'm more than happy to expand on what we talked about. So, Mark, thank you for having me on. This has been fantastic, and I wish you all the best, my friend. Stay safe out there.
Take care.
Thank you.